Hello everybody, this is Matador again from freetrainingvideos.com. It's still December 30th, about 12:07 p.m. Eastern Standard Time, and we are now marking that gap fill that we talked about this morning. Fantastic to be able to read the sentiment from that. So beautiful gap down right into the 112 area, 112.20. Came all the way back to do a little bit greater than 100% retracement of that down gap, which is X% more bullish. So we were looking for a higher swing low. Started to get one right through here. Actually came back and did about a 76% retracement before running back up into this area of resistance and support. Now is a great number, the 112.45/50, but 112.45. So here's a great support. Support breaks hard, that becomes resistance once, twice, breaks hard back through that, and now support. And we're working our way toward the 112.60 mark again. I'm going to need to see that break out above that line with good market internals before I have any confidence on the upside, especially after the dollar is moving higher like it is. On the 15-minute chart, you can see that same picture, the perfect gap fill to at least the beginning of this. So the 112.20, like we talked about, the 112 mark. Excellent places here to watch for support whenever you get any kind of area like this, a gap. When it fills more than that, a lot of times it resolves to the downside. When it feels greater than that, sometimes you can get resolution to the upside. But anyway, knocking at the door of 112.20, excellent support area. We talked about that this morning. I need to see it break back to 112.60 before I have any confidence that it might go higher. Also note the 50 MA on a 15-minute chart here on the SPY. It's rolled over, so there's a momentum loss here, at least on that time frame. The 60-minute chart looks a little bit nicer. Again, here's that gap fill. Look where that lines up with these highs back in here. Kind of neat to have that shape up. And so all in all, we're looking at a great base between 112 and 113, and that's what we're looking at. So the trend, let's go back and look intraday, has been falling nicely after a pretty large start. So it's been bleeding out the whole time. Good confidence about maybe not going long into the face of that, but huge amount of volume, at least at the open, flowing into stocks on the decline. That's not such a great bullish indicator, and we're still at 1.5, which is nothing to sneeze at. It just crunched all up since it had to fit this on the chart. So be very, very careful how I go long. On the flip side of that, the trend Q is at 0.6, which is almost double the bullishness of that. So big divergence between the trend and the trend Q. The VIX, a good tiebreaker like we talk about sometimes. Let's look at that at the $20 mark, right through here, 2010, right through great gap fill, almost completely, but not quite, and we're chopping around on these highs. So that speaks to a consolidation to my eye. So pretty choppy market right now. I would watch carefully again for that resolution above the 112.60 or below the 112 mark here on the broad markets. Or 112.20, excuse me. So good stuff, everybody. Hope you're having a great trading day so far. A nice little run around the markets. Look forward to D7's video at the close, and I'll talk to you soon.